Tensions in the Middle East are once again reshaping the global landscape. This time, it's the prospect of a U.S.-Iran peace deal that's sending shockwaves through markets and capitals worldwide. With the Strait of Hormuz, one of the world's most vital maritime arteries, at the center of the latest standoff, every diplomatic move is closely watched by traders, investors, and governments alike. In recent days, the United States has put forth a plan aimed at ending the conflict with Iran. Tehran is weighing the proposal, though its true intentions remain unclear. Pakistan has stepped in as a mediator, hoping to transform a fragile ceasefire into something more permanent. The stakes are high. The mere hint of progress has already sent oil prices tumbling and stock markets climbing, underscoring just how tightly global economic stability is linked to regional peace. To understand why these talks matter so much, it's worth remembering the history. The U.S. and Iran have been at odds for decades, with the Strait of Hormuz frequently caught in the crossfire. This narrow stretch of water handles a fifth of the world's oil shipments. Whenever tensions spike, the threat of disruption pushes up energy prices and rattles supply chains across continents. The result? Markets react instantly, as efficiency and stability drive the flows of global trade. But this time, there's a twist. Iran has announced a new traffic system for the Strait of Hormuz, adding a layer of complexity to already strained maritime logistics. Meanwhile, China is calling for the strait to be fully reopened, pressing for the kind of trade predictability that underpins its own economic interests. The involvement of outside powers like China and Pakistan highlights how regional disputes are rarely contained. They ripple outwards, shaping the incentives and strategies of actors far beyond the Gulf. While the U.S. and Iran edge toward possible détente, the broader region remains volatile. Israeli military actions in Beirut and ongoing UN interventions are stark reminders that peace in one theater doesn't automatically translate to stability elsewhere. The interconnectedness of these crises means that any miscalculation, whether in Tehran, Washington, or beyond, could quickly undermine hard-won economic gains. Looking ahead, several scenarios are possible. If peace talks succeed, markets are likely to reward stability with further gains, reinforcing the efficiency that underpins global prosperity. But if negotiations falter, the risk of renewed conflict, and with it, trade disruptions and price volatility will loom large. For now, all eyes remain on the negotiation tables in the Strait of Hormuz, where the next moves could reshape not only the region, but the flows of commerce and capital across the world. In the end, the race for peace in the Gulf is about more than geopolitics. It's a test of whether economic incentives and market efficiency can prevail over conflict and uncertainty. As diplomacy unfolds, the stakes for trade, prosperity, and stability have rarely been higher. The stories that define tomorrow are already unfolding today. Subscribe to Today in Context for clear, grounded analysis of the events shaping our world, one story at a time.